Hi, this is Evan Hutcheson, and today I wanted to briefly go over what I think is one of the most useful cost reports in QuickBooks, the actual versus estimate detail. This right here is a copy of one. These are real numbers, and it's for a home building company. As you can see over here, these are home building accounts, and it's for a company that, or it's for a job that is not perfect, so we're going to kind of look at some flaws in it, and I wanted to use this to kind of show you how you can catch these flaws and try to use this report productively. So these accounts right here are, like I said, for home building. You can do an assortment of industries. You can use this report for an assortment of industries, but of course you'd have to change the services. It's listed in the time sensitive, so it starts with pre-construction and moves on down the line of building your home. You have excavation, concrete, masonry, framing, and so forth, on down to landscaping, cleaning, things like that. So this column right here is it's the estimate. This is where the estimate comes from, or this is where the estimate goes to on this report. So I'm sure you know what an estimate is, and it's how much you think each one of these activities is going to cost you in the long run for this whole job. These are the costs right here, and of course you want your costs to equal your estimates. Theoretically they should, but it's rarely going to ever happen perfectly. These are on an accrual basis, so they're not on a cash basis, they're on an accrual basis. So is the revenue. That means that if you've paid for the cost already, of course it's going to show up. It'll show up on an accrual or a cash basis. But if you have gotten the bill and you put the bill in your system and you have not yet paid for it, it's still going to show up here. If you've sent out an invoice and haven't received the money yet, it's still going to show up here. So this is an accrual report. So that'll show you all activity for this job, which is, for this at least, an accrual report is much better than cash basis, I think. The bottom line down here is, of course, the totals of each column. Your total estimate. This job, usually you don't want to put in your builder's fee. This company likes to do it to just kind of have a total cost column for pretty much each column. But you're not, I mean, this is income, it's not a cost. So their total estimate is really $329,000. But it's showing up as $349 because it includes the builder's fee. The total cost at the end of the project ran $371, actually $351,000. So this is $351. The cost that was the cost that they paid out, or that they received bills for. By now, since this is over, everything has actually been paid. So a cash basis report would look the same for this particular job. But as you can see, they went quite a bit over budget, a little over 20 grand over budget, which of course is not good. And their revenue they received is $381,000. So they still had a net profit from this job of $381,832 minus $351,740, because this, like I said, is not really a cost. So they still had a good profit, although even though they did go over budget. The builder's fee, as you can see, it's only $7,500 right here. It looks like because because there is a retainer credit right here. I'm guessing this $25,000 is a credit, an original deposit. Yes, it is. Looks like there's two of them for 25 grand. And part of that deposit was paid back right here. So that's kind of beside the point. I don't even know why I'm going over that right now. I'm just trying to figure out for myself what was going on. But anyways, this column right here should theoretically equal this column right here, because this is what they paid for, $60,944. Then they turned around and invoiced that out to the client right here. So they invoiced it out to the client to cover their costs, and then they added a builder's fee to each invoice. So as you can see, most of them equal, but not all of them do. This doesn't equal this because there is an issue with one of their, things happen, and they decided to invoice a little bit more than they actually paid for. But anyways, so theoretically these should equal these, and then you see your net profit down at the bottom, but that doesn't always work that way, as you can see here. And that's kind of what I wanted to show you. This page, or this report, you can kind of drill down on it and see what you want to see. Like there's, for instance, this cost right here is $25,283. This revenue is $23,827. So you can drill down on both of those items and try to figure out what the difference is right here. You can go and drill down on each bill too if you want, or each check, whatever it might be, and figure out what exactly it is. So this report's very useful for doing a quick scan and seeing what's wrong with that particular job. It also has the difference column right here, which is very useful, because then you can see, okay, I went way over budget right here. It wasn't even in the estimate. This excavation was not even in an estimate, but we spent $930 on it. So we can figure out why we did that right here, or we went under budget here, which is a good thing. We got to make sure that's actually right, and so forth. You can go on down the line and just figure out what you need to figure out. So you can do all that through the drill downs, and you can get kind of a grand idea through these grand totals, and that's pretty much it. I mean, if you want to use this report, you will find that it's very, very useful. So I encourage you to use it if you're not already using it. But anyways, that's really all I have for this. If you do have questions on it, I would be happy to talk to you. Feel free to give me a call or email or whatever you want to do. So I hope to hear from you. Thanks.